Hi everybody, welcome back to my channel. And today we are going to talk about what happens now in the market. I'm sure you guys have seen the huge volatility today, and you are liking the fact that today you guys have all earned money. I'm very happy to see you guys grow. So today's video, the endeavor is to let you guys know that what is likely to happen in the next few days. In most of the slides today that we are going to talk about three probable cases. One, the base case scenario, one, the bear case scenario, and one, the bull case scenario, right? So before we stay until the very end, the scenario metrics on slide 11, which is the last slide, is the most interesting one I have made in this channel all year. So do watch till the very end. So let's start with the first slide, which is second facing some issues. Uh, yes, right. Yes. So this is second slide. So let me give you a full context because this relief rally didn't happen in a vacuum. So to understand what we are doing today, you will have to understand what we have been doing for the past 6 weeks now. So Feb 20th is when the US and the Israeli forces struck Iran. Iran retaliated immediately by closing the Strait of Hormuz, the single most important oil choke point on the planet, throughout which almost 20% of the world's oil supply normally flows. Oil prices spiked 60% in the weeks that followed. Brent touched $120 a barrel. uh, on March 30th, S&P 500 entered a correction territory, down nearly 10% from its Jan peak. The Nifty was trading near its 52-week lows. Global risk sentiments was in a deep freeze. FIIs pulled out of the Indian markets to a tune of about 41,000 crore rupees over 6 weeks. April 6 is where Pakistan entered the picture as a back channel mediator, and reports emerged of a ceasefire agreement, right? Uh, April 7th, Trump sets an 8 p.m. Eastern deadline. If Iran didn't agree to open the Strait of Hormuz, he threatened what we called devastating strikes on Iranian infrastructure. And then, less than 2 hours before the deadline, came the last night, where Iran confirmed of a possible ceasefire that went into effect at 8 p.m. Eastern Standard Time. And April 10th, which is this Friday, there is a final formal peace talk that is likely to happen. And this is the most important event in the next 7 days. And I will come back to it throughout the video. Now, before I go any further, I need to say something very clearly. This is just a 2 week ceasefire. It's not a peace deal yet. The gap between what Iran wants and what US is willing to give is still enormous. Uh, the peace talks on Friday could collapse, and if it does, every one of the gain evaporates overnight. So what? So we are just in a relief rally. It's not an all clear signal. Keep that in mind before we go through every other channel. Okay. Now let's look at Nifty 50. As I record this, Nifty is trading at 23,885, up 3.3% on the day. Now look at this chart. See that V-shaped recovery. This dip that you see around March 21st, that's where Nifty touched 22,400. That was the peak of fear. 6 weeks of FIA selling, oil above $115, rupee at 93.8. That's the bottom of the maximum pain. Now let me give you exactly the levels that you need to be watching in from here. Uh, so Nifty is still below its 50-day and 200-day moving averages on a shorter time frame, which means this is a short-term recovery within a broader corrective structure. We are not in a confirmed bull run yet. So what three scenarios that can likely to happen in the next 7 days? In case there is a bull run, you can see Nifty could reach around 24,400 to 25,000 levels alone in this week. And if it is a base case scenario, which has a 55% probability, you can see Nifty consolidating in 23,500 to 24,000 range. In the bear case, you can most likely see that Nifty falls back to 22,800 or below. Now let's look at all the sectors. The sector rotation, ma'am. This is where you decide what to buy, what to hold, and what to completely avoid. I think IT and tech is still, I am bullish on that. Banking and insurance neutral. Energy and oil bearish. Defense bearish. Aviation bullish. FMCG and pharma bullish. Now, if you look at the bar chart, at this bar chart, what you see that FIIs have sold about to a tune of 86,092 crore rupees on April 7th. DIIs have brought 79,079 crore rupees, which means that DI have absorbed most of the FIIs selling, and that is still holding the market afloat, which will might not be the case for a long time. Now let's look at the US market a bit. Okay, so if you look at the US market, what you see that the S&P 500 futures are up about 2.7%. The Nasdaq 100 futures are up about 3.5%. The Dow Jones have jumped about 1,000 points. The S&P 500, as we entered this week, was still in the correction territory, down 16% from its Jan peak, and 6,600 for the past few weeks. The resistance level I'm watching most closely is a 66,000. So Nasdaq 1,000 is a very interesting zone. The Nasdaq has reclaimed its 200-day moving average in this rally, something the S&P 500 hasn't done yet. The RSI broke above its prevailing downtrend line. The key level is 20,800. A sustained close above 20,800 would confirm the Nasdaq is back to its uptrend, and we guys need to watch it very closely. Now, if you look at the macro context here that drives all of this, the most important people aren't talking about it, which is a 10-year treasury yields that fell 9 basis points to 4.25%. So look at this sector chart. If you look at the sector chart, you see airlines is up about 8.5%, healthcare 9.4%, energy down 6.2%, defense 5.8%. The same rotation is happening in India, is happening in the US as well. Energy and defense are out, technology, aviation, healthcare in. So one final note to the US market, the relief rally is sentimental driven. The fundamentals haven't changed much yet. The tariff environment, the debt situation, the inflation residue, all of that still exists. Do not confuse a ceasefire bounce for a fundamental re-rating just yet. Okay. Now let's talk a bit about crude oil a bit. So oil, this is the master variable, right? Everything else, the rupee inflation, the RBI decision, India's current account deficit, corporate margin, everything close to what oil gives, right? So last night Brent crashed to $91.7, WTI to 91.05, and which is like a 16% single session crash. Now, what this does mean for India specifically, and this is what I wanted to spend most time on because it's profoundly important. So this cascades into five scenarios. Number one, India's current account deficit narrows, which strengthens the rupee. Inflation expectations fall, which gives the RBI a breathing room, and OMC margins recover, which is the oil company, HPCL, BPCL, IOCL, Reliance, all benefit. Petrol and diesel price cut becomes possible within 2 to 3 weeks, and the flight companies, like the aviation companies, Indigo, Air India, to get an immediately structural margin improvement. So that's what we are likely to see. Now let's look at the commodities over here. The interesting thing that you see over here is that gold went up, but only by 2%. When you have equities surging 3% to 4% globally, uh, you would ideally expect safe haven assets like gold to fall. But the fact that gold is holding above 4,800 and not collapsing tells you something very interesting. It tells you the market is not fully convinced that this ceasefire will hold for a long term. Uh, Now, let's look at silver. And this is where the signal I wanted to pay close attention to. Silver, it surged to uh, it surged like this, right? After a ceasefire, the market is saying we expect global supply chains to normalize. No, we expect industrial productions to recover. We expect shipping routes to reopen and manufacturing to come back online. These are all the predictions that the market is considering right now. And that is the reason if you see silver's resistance is still at $80 to $85, where the support 70 to $72. The bullish biasness is that the strongest bullish bias across any commodity that I'm covering today. The key takeaway on this overall slide is that gold staying elevated, which means the market is still nervous, and the fact that silver is surging means that the market is pricing in recovery. Both can be right simultaneously because right now the world is simultaneously nervous about geopolitics and optimistic about economic normalization, and that's the tug of war that we are in right now. Uh, Now look at where the Indian rupee was on Feb 28th when the war started. It was at 84 rupees to the dollar, a level it has taken years to reach, a level the RBI has defended carefully. Over the next 6 weeks, as oil surged, FII sold, and India's imports bill exploded. A rupee collapsed to $93.8. That's a depreciation of over 11% in 6 weeks. For an economy as large as India, that's an extraordinary move. Today, the